In today's video, I'm going to walk you through my trading plan for next week, and I'm going to show you exactly where I expect high probability setups to materialize. If you're new to the channel, my name is John Fortune. I've been trading financial markets now for over 18 years, and the setups that we're going to look at in today's video are the exact same setups we used to generate our members over 400% returns. So if you are new to the channel, you can download for free the GMT strategy guide with the full list of setups using the link in the description below or using the link in the pinned comment below. So here's how we're going to do that. We're going to start by looking at the DXY followed by the USD pairs as well as Bitcoin and Ethereum. Then we're going to go on to the portfolio selection. We're going to look at the quantitative analytics, and that's going to give us the high probability setups in the non-US dollar pairs that we're also going to look at. And we're going to finish up with gold, silver, and crude oil at the end of the video. And as always, the timestamps of these markets will be in the description and pinned comment below. Remember guys, if you enjoy these videos and you feel like you get some value out of them and they help you in your trading in any way, be sure to subscribe to the channel because it really helps the channel when you do that. And I really appreciate all of you who have subscribed to the channel so far. So before we jump into the charts, I have a very quick and important announcement to make for you guys. Next week, we will be taking the GMT course out of the membership because we've got a couple of big things we want to do this year. And one of them is to remaster and build out a version 2 of the course to make it bigger, to make it better. And we won't be able to do that with it as part of the membership, unfortunately. So if you are thinking of signing up over the next week, would probably be the best time, because after that, you will not get the GMT trading course as part of the membership. Anybody who has the course as part of the membership before we take it out next week will get to continue access to the course as part of their memberships. We're not taking that away from anybody, but after that, you will not be able to access the GMT course in the GMT membership. So if we pull up the DXY on 4 different time horizons here, you can see the daily, the monthly, the weekly, and the 4 hours. First of all, starting with the 4 hours and just working our way up, with technical analysis, you really want to go from top down. But just to put it into context, last week, I highlighted this trend line on the dollar, and that was kind of the dividing line. If we could break through there, that was where we could look for shorts. If we bounced, actually last week, I was looking for shorts, and I did short US dollar CAD. In fact, I still have US dollar CAD as position going into next week. And I'm going to talk you through a couple of Monday, Tuesday reversal plays. Again, for those of you who have already downloaded the strategy guide for free, you will know that the Monday, Tuesday reversal plays are markets which overshoot on the week, and then they stay there and they hold there, and then they start to reverse on Monday or Tuesday. So we'll be looking at a couple of those in the dollar pairs in a moment. But the DXY bounced and we're starting to rally to the upside. So the key thing here is this: we've broken out of this double bottom reversal. This is a confirmed technical reversal in the daily time frame in the dollar index. We tested the low, we held it, we didn't even manage to really close down below this, came back, and now we're breaking out to the upside. So the reason why this is significant is, first of all, we're seeing the same pattern developing in the weekly. So this is where you start to get bigger reversals in markets. You get a cascading effect. It kind of bounces in the 4 hours, and then the daily breaks, and then the weekly pattern breaks, and then suddenly you're in a much bigger move. So going into next week, I do favor long positions on US dollar pairs. The US dollar is a top long theme heading into next week. And when we go through the portfolio selection later on in the video fairly soon, you will see that the relative data is actually quantitatively backing up and supporting what we're seeing here in the technicals. So dollar longs are one of the top themes going into next week for me. So looking at euro dollar is actually the first pair we're going to look at, which is a Monday, Tuesday reversal play. This came down 1, 2, 3, 4 days last week. It traded below the weekly lower bound, which means it turned oversold during the week. And now we're approaching a key area of support in the daily time horizon. So what I'm looking for next week in euro dollar is I'm looking for euro dollar to come down. And even though overall I am looking for shorts in euro dollar, I suspect we're most likely going to come down to the daily support level, hold here, and then bounce, even if it's for 1 or 2 days. That's where we get that kind of Monday, Tuesday reversal. Sometimes you get a Monday day down, and then you get a reversal Tuesday, Wednesday. Sometimes you get the reversal on Monday itself. But in the first half of next week, I will be looking for this to come down, test support, and to bounce for at least 1 day to the upside. So that's the kind of Monday, Tuesday reversal setup that looks to be coming into play. Something really important to pay attention to next week, a potentially big event with the SCOTUS decision on Wednesday. It is now expected that the SCOTUS are going to give a tariff decision on January the 14th. And I suspect we could see, if they do give that tariff decision, we could see quite a bit of volatility in the market. So the Monday, Tuesday reversal plays next week could be fantastic opportunities to get into some of these markets and out with 1 to 2 days worth of movement, and then be flat heading into the Wednesday SCOTUS decision. So Monday, Tuesday into Wednesday, into that SCOTUS decision, those Monday, Tuesday reversal plays are going to be some of the key things I'm going to be looking to profit from early next week. Next is pound dollar. Now, when we look at the portfolio selection in a moment, you're going to see both the pound and the dollar are two long themes that I like heading into next week. So I can actually buy pound dollar or sell pound dollar next week because they should hold their ranges when you get two strong currencies. But I would on balance prefer to short pound dollar. Now, the setup I'm going to be looking for specifically is a pullback and a test of the left shoulder. We've got a developing head and shoulders because we pushed up, we failed at the high, we've drilled right down through the prior low, almost, well, in a straight line. And so now any pullback in this area should, on balance, at least come down for an ABC because of this momentum, or a bigger third wave to the downside. It could, of course, go into a range as well. You know, if it hits that C wave and then it kind of does this. But either way, regardless of whether it was going to come down for a range or start a new trend to the downside, I would just be looking for that kind of flip in this area. So again, for those of you who've got the free strategy guide, you know this is kind of a range play. It breaks back above the moving average. In this case, it hits the left shoulder and then it starts to make its way down. And for 1 or 2 days back in this direction, that's what I'm going to be looking at next week, capturing in pound dollar. Next is US dollar yen. Now, again, when we look at the portfolio selection in a moment, you will see that US dollar yen is a market I can only be long, cannot short this market because the Japanese yen is fairly weak, relatively speaking, and the dollar is fairly strong. What happens when you get that? You get directional moves. So if you actually overlay that quantitative data onto the chart here, you can see we are actually forming somewhat of an ascending triangle pattern where we've got this flat top. We've only just kind of tested it for a second time, but look at this. This is what's important. Higher low, higher low, higher low. When you start to build higher lows like this, even if we kind of pull back and kind of settle under here, the chances are you get a breakout. You look at the portfolio selection. Is this a market that has the ability to rally and trend? Yes, it does, to break out because we've got a strong dollar and a weak yen. So I can only buy this market going into next week. What I would like to see is if we did get a bounce from here and we came back down and retested the lows, this is where I would step in for, and again, this would just simply be a range trade, back inside towards the moving average for a 1 or 2 day bounce. So that's what I'm going to be looking for if we can buy the dip in US dollar yen next week. But I wouldn't be surprised to see this just breaking out. Perhaps you get a pullback and a retest and we start to make our way to the profit taking zone. But that's what I'm going to be looking for specifically. Cannot sell this market though next week. I can only be a buyer. US dollar CAD is a Monday, Tuesday reversal play. And look at this. On a daily basis, we are overbought on a rolling daily basis. So this market needs to pause or correct for 1 or 2 days now based on rolling sentiment. And it's a Monday, Tuesday reversal from last week because it pushed into its weekly upper bound and it didn't reverse. I actually shorted this last week. I actually took a loss on this. This was my first loss in the last 16, 17 setups. But overall, I didn't lose any money because I also shorted EurOCad. And as they came down, I used EurOCad's profits to offset US dollar CAD. And I also bought CAD yen at the same time. So on the CAD long theme, overall, we got paid out. But I do expect, you know, if we get a push up on the Monday, what do you think I'm going to do? I'm going to use that to go in and buy a little bit more, but not US dollar CAD, you know, buy euro dollar perhaps from that key area of support, right? We get that push into it. That would be the market I'd be looking at for that bounce from the key area of support. So I do think we're going to see a pause or reversal for 1 or 2 days, either Monday, Tuesday or Wednesday. I'm already short this again, somewhere up here. And so I will be looking to see, you know, if we get one more push up, I'll probably buy euro dollar for that Monday, Tuesday reversal. So those Monday, Tuesday reversals are very good going into next week because they give us the opportunity to potentially be in and out of some of these pairs before the SCOTUS decision. Because let's say we get a nice reversal here on Monday or Tuesday and we get paid on Monday or Tuesday for 1 or 2 days, then we can just kind of sit Wednesday out, let the SCOTUS decision happen, and then we can get back into the market after the decision takes place. So the Monday, Tuesday reversal play is a throw over from last week, but if we do start to pull back, the place I would start to look for a potential long would be a retest and a stair step of the 1.3805. So if we do get a nice pullback, that Monday, Tuesday reversal play, and it turns into a much bigger kind of pullback, this would be the area next week. I would also be looking for a 1 or 2 day bounce to the upside in US dollar CAD. Aussie dollar is another market with two strong currencies. So on balance, I expect this to kind of range, but Of course, we've got the tariff decision potentially next week, so we could see pretty much anything happen off there. We could see some big moves. But assuming that it doesn't materialize next week, what I would be looking for is for Aussie dollar to come down, test the support area in the buy zone, which sits at the 0.6592. And that is the failed breakout that I'll be looking for next week for a pullback into towards the moving average again. You know, this is a range reversal. Most of the trades we take are range reversal plays. In other words, Forex markets are ranging most of the time. When they get directional, we can trade those kind of dip and flip setups, or we can trade those rip and flip setups because they're with the trend. But most of the time, these markets are ranging. That's why we employ mean reversion strategies into Forex. So that's what I'm going to be looking for next week. It's the only setup I can really take in this. I cannot short the Aussie under any circumstances really next week because it's my #1 long theme heading into next week. And the final dollar pair before we move on to Bitcoin, Ethereum is New Zealand dollar. Now this is breaking down as a head and shoulders, and this pattern is, in my opinion, going to break to the downside and work. Why? Okay, to caveat that, if we get a tariff decision next week, we could see all kinds of volatility potentially. But assuming we don't get a tariff decision, or the tariff decision doesn't make as much as an impact as people think it will, this pattern should break out to the downside. Why? Because again, when we look at portfolio selection next, you will see that the dollar is turning towards one of the top themes, and the New Zealand dollar is one of the best short themes. And if you remember back to that double bottom breakout in the dollar index, that is showing us that kind of strength coming in, and this breakdown here, in my opinion, has a very good chance of working. So we do have a head and shoulders reversal. If we get this market pulling back, so it's an if-then process for me. If the market does X, I'm going to do Y. If the market pulls back and tests the 0.5811, you know, just because we've got a right shoulder here doesn't mean it can't come back and retest it. If it does, this is the key area of resistance that I'm going to be looking for a failed breakout to the upside and a 1 or 2 day reversal back inside the range. And the moving average would probably do something like this, and it'd be kind of back into it. So again, we've got that kind of ranging setup. A head and shoulders pattern is, you know, a reversal pattern, but during a reversal, markets do tend to range and consolidate. So it would still be a range play that I'd be looking at here. Okay, so if we have a look at Bitcoin and Ethereum, now I've just, for those of you who have noticed, adjusted my camera because I've bought a new camera and it just started to slide down. I was just noticing as I've been recording here, a bit like a drunk guy at a party, you know, sliding down his chair. And so I could see the camera going higher and higher. So I have just adjusted that for you guys. Hopefully that is a better picture now. But looking at Bitcoin, when we're trading volatile markets, mean reversion strategies are not necessarily the best strategies. You know, Bitcoin and Forex is not necessarily going to be the same type of strategy that you want to employ. So very volatile markets, I would actually employ breakout strategies, and low volatility markets, and we go through all this in the strategy guide, I would employ mean reversion strategies. So I'm looking at this here because we're starting to get this coiling, and we're forming here this kind of ascending triangle where we've tested the highs and now we're kind of holding above it. So in Bitcoin, because it's a volatile asset class, you know, I wouldn't personally try and trade the range, because if it breaks, you know, you could be on the wrong side of a very volatile move. So what I would like to see in Bitcoin is a breakout. Now we actually have the same pattern developing on the 4-hour chart, which is quite funny down here as well. So I would need to see it first of all coming above the 91,545, because when you're in very, very tight consolidations, you really need to go into a wait and see mode, because when the market is ranging and it's loose, then you can range trade it because you've got some by definition range on it. When the market is tightly consolidating, you can't really start to get involved in trying to range trade it, because the tighter it gets, the bigger it's going to break when it breaks out. So when you get tight consolidating markets, this is where breakout traders actually take over. Mean reversion people or those strategies would step to the side, and you would simply wait for the breakout to materialize. So the first breakout, which would be an important pattern breakout, would be above the 91,545. And then if you can trade above the 93,150, that is going to be the key level where we really start to break to the upside, because once we break this, then we're going to make a run at the monthly candle high at the 99,000. So a daily close above the 93,150 is what I would be looking for in Bitcoin in order to start to look for a breakout, first of all to the 9,900 and then above it. Next is Ethereum. Now it trades very closely to Bitcoin, of course, and of course you still have that increased volatility. So again, I'd be looking at breakout trades only. we are above the daily moving average. And although we are kind of, consolidating in the weekly and we're crisscrossing in the monthly, I do think this has a good chance of making its way back up to the 3477.44 over the next couple of weeks. So the reason for that is because we're building higher lows, right? There's a low, and then we build a higher low, and then we build another higher low. And now we've crossed over the moving average. You see, we crossed here, we pulled back, and then we tested up here. So I do think we could see this pull back. The 3145.01 is the intraday breakout above there, because we actually are starting to form this pennant in the 4 hours. So you'd need to see it clear here, and the moving average would also follow it like this. And that's when you could start to look for that kind of bull flag setup that we talk about in previous videos. And I would be personally looking to target the 3477.44 if we can break above the 20 period moving average in the 4 hour time frame. Okay, so moving on to the portfolio selection, you can see the Aussie is the standout long, and this is why I was saying even with the US dollar is kind of neutral but getting stronger, but the Aussie is outright strong. That's why I was looking at buying that dip in Aussie dollar if we can get down there. Again, it's an if-then process for me. If something happens, then I look to react. If nothing happens, then I will just leave that market. That's one of the reasons why I increased the number of markets we're looking at this year. So you have a lot more chance of capturing some of these setups because we're broadening the amount of markets. So the US dollar is the second currency I like to the long side. We've already discussed this. Not only do we have that technical breakout, we're starting to see a relative outperformance in the US dollar versus the other currencies. So now we've got the individual technical breakout and the relative quantitative data to back that up. We also have the New Zealand dollar as the #1 short theme. Again, we've got that reversal pattern with the head and shoulders to the downside versus the New Zealand dollar. So I do think that could be a successful pattern, or has a very good chance of being it. The Canadian dollar is the #2 short that I'll be looking at. I was actually buying the CAD last week, profited from the CAD theme, even though I took a loss in US dollar CAD. But this week I'm looking to be short the CAD. And the euro is the third currency to the downside heading into next week as well. So again, really looking to be short euro dollar given the chance. The third currency to the upside, the yen is strengthening somewhat on a relative basis, but the pound is still my #3 currency going into this week. So to cut a long story short, the markets that I like at the top of my watch list going into next week are Aussie New Zealand to the upside, which we're going to look at, Aussie CAD to the upside, which we're going to look at. I also like EurAusd to the downside. I also like New Zealand dollar to the downside with that head and shoulder breakout, and we've just looked at that. I also like US dollar CAD to the upside, although I do expect a Monday, Tuesday reversal potentially first, or maybe even it reverses on Wednesday, but an early week reversal because we are overstretched. And then I'll be looking to buy the dip after it pulls back. And we also looked at euro dollar to the downside. And finally then, I like pound New Zealand to the upside, pound CAD to the upside, and euro pound to the downside next week. Okay, so moving on to the watch list, looking at the non-US dollar pairs that I like heading into next week. Aussie New Zealand is right up there because the Aussie is strong and the New Zealand dollar is weak. And as you can see, this market has broken out and it's trending to the upside. So this is not a ranging market. This is a market I only want to be buying dips in. And for those of you who've got strategy guide, you'll know the setup here I'd be looking for is the dip down and then the flip back up. So this is where we dip down, we trade into the buy zone. We test a prior support level, preferably type 1, because this bounces price back to the upside. So again, you don't have to be a member of GMT to know this stuff. All of this is in the free strategy guide that I'm referencing. If it comes down and you test the price support level and you're in the buy zone, and at the same time, very often you get that dynamic support from the moving average. So that would be where I'd be looking for the market to dip down next week. And if we enter this kind of area here below the 1.15784, I'm going to be looking for a 1 or 2 day flip to the upside. That is what I like to see in Aussie New Zealand next week. I can only be a buyer of this market next week. Next is Aussie CAD, and look at this chart. Isn't this a beautiful chart? I mean, we've got the range and the breakout. These were the areas and the examples we gave in the strategy guide where we were actually, this one bought the dip down here. So this was a kind of range reversal play. Then you start to break out and you get the quantitative data shifting. It says buy Aussie and sell CAD. So now there's no range play here. This is a breakout we should expect to continue based on the portfolio selection. And the setup here then would be a dip and a flip. So I'd like to see Aussie CAD come down. It's such a nice setup in the way that we've got this momentum. Then we pull back, and at the same time as turning oversold next week below the 92234, so the 0.92234, we would be stair-stepping the range high and at the same time potentially trading into the moving average. I mean, that is about, if we can get it, I mean, this could just break out intra-week, but if we can get the pullback into this area, that is about as a star a setup as you could possibly get. So really, really like this setup next week. I can only be a buyer of this market or do nothing. Could this pattern get completely destabilized on the SCOTUS decision on Wednesday if it does materialize? Possibly. So I would say, you know, be in and out, given the opportunity, and then wait until after the SCOTUS decision to enter new positions. At least that's what I'm going to be looking to do next week. Next is EurAusd. Now this is a short or nothing for me. I cannot buy this market. Really nice descending triangle breakout. And the breakout level is at the 1.75685. Very much like AussieCAD. Any kind of pullback in this area, if we can get it, it's going to be a kind of stair-step retest of this low over here, and it would be a rip, and I'd be looking for that flip off of this level. Now, in the strategy guide that you can download for free in the links below, you will know that I say to you, you can swing trade those kind of setups for the lows and the highs. So for example, you pull back and you bounce here, you could see the market flip for a day or two, and then you could see it actually start the next leg down into the lows. There's nothing wrong with that. If you like to swing trade and hold on to things for longer periods of time, looking for bigger returns, that's perfectly fine. But you will have a lower win rate that will exacerbate your drawdowns, that will give you less margin for error to miss trades, etc., etc. And so you just have to accept that trade-off. If you are looking for bigger reward, you'll have a lower win rate and bigger drawdown periods and more margin for error. So I prefer to go for the high probability moves, which are that kind of 1 or 2 day reversal, and then it can actually pull back and it can bounce again, it can pull back and bounce again, and you could get paid 3 times here before it even collapses or even reverses. Whereas if you're just holding this for the lows, you can end up getting stopped out. So that's what I'll be looking for personally next week. EurAusd, nice setup to the downside with that kind of rip and flip setup. Moving on to the pound pairs, looking at pound New Zealand. Now pound New Zealand is a range reversal play because you can see we failed at the high. We are building higher lows, and so we do actually have this kind of ascending triangle pattern forming here. However, I'm only looking to be a buyer anyway. Ascending triangles are bullish breakout patterns. So what I'd like to see is I'd like to see this cross back over the moving average like it did here, and this range continues. I mean, you can see the moving average here is ranging. We push down, we trade below the 2.31806. This is what I'll be looking at next week. And we trade into the type 1 support level, which in the past pushed price higher at the 2.3106. Put yourself in the shoes of sellers, okay? Put yourself in the shoes of sellers, because anybody who's short over here and they're taking a risk because this is a bullish setup. So if it breaks, they could be on the wrong side of a trending market. But there are people who are short, and if this does come down, they're going to be sitting on profits. Would you, as a seller in this kind of, especially in this kind of ascending triangle pattern, would you book your profits trading into this low and into the rising ascending channel? The answer is most likely yes. So if they're going to cover their short positions, any kind of breakout below that level has a very good chance of failing. So I'll be looking for a 1 or 2 day bounce from that level next week in pound New Zealand if we can get there. Again, that's why they're called setups, because we war game them and then we wait for them to set up. And when they do, that's when we pull the trigger. Next is pound CAD. I can only be a buyer of this market. This is a dip and flip setup. I want to see this come down next week, trade into potentially below the moving average, but into the moving average, and stair step this very, very tight consolidation high, which sits not only at the 1.85166, but also right at the buy zone. So any kind of dip down in pound CAD into this area next week, into the 1.8516, this is where I'm going to be looking for a 1 or 2 day bounce to the upside. And again, because it's a dip and flip setup, these are the kind of setups that can turn into successful kind of bull flag patterns. So you pull back, you flag, you bounce, and then maybe even come down, test this again, and then you start to make your way towards the highs. But I'm going to be specifically looking for 1 or 2 days to the upside next week if we can get it. And wrapping up the Forex universe with Euro Pound before we move on to oil and the commodities. I do like Euro Pound for short, so I can only be a seller or do nothing. I would like to see it breaking back above the moving average and into the descending channel connecting these two highs. So we have a descending key area of resistance, and it intersects exactly where the upper bound is on the week next week. In other words, where we enter the sell zone. So if euro pound, which is a short or do nothing, finds some strength midweek or intra-week, and it can rally into an overbought area and at the same time trade into the top of the channel, this is where I'd be looking for a 1 or 2 day reversal to the downside. So this is the kind of setup I'm going to be focused on next week. Again, with all of the markets, just bear in mind that SCOTUS decision, very important. If we do get a decision on Wednesday, we could see some decent volatility. So just be aware of that. Moving on to crude oil. Now, crude oil is technically still a short, but we have a little bit of a nuance here, a bit of context that we have to go over, which of course is the unfolding situation in Iran and Venezuela. Now, Iran, although it actually has less oil reserves than Venezuela, it actually has a lot higher output. There isn't as much oil actually being taken out and supplied by Venezuela, even though they've got larger oil reserves. So the Iran situation is actually more important for the oil markets currently than the Venezuela situation, even though Venezuela has more oil. And it is potentially an unexpected, although we kind of know it's going on, it has the potential to cause an unexpected catalyst to the upside in crude oil. So when you're in a scenario where a market is a short, but something is going on which could catalyze it strongly in the other direction, then you kind of have to sit them out. So I don't think this is one of the best markets to be trading going into next week. I will highlight two things though. We do have an inverse head and shoulders, and this is taking place as hedge fund bets to the long side in crude oil are hitting multi-month highs, although that's on a gross basis. So I do see this kind of breaking out, and I would not be surprised to see this coming up into the 62.59. You know, it's kind of weak. It is reversing. Maybe on balance out of either of these, that would probably be the better setup, even though it's kind of a weak market, because at least if something happened in Iran and it was catalyzed, it would work in that direction. Now, if we didn't have the ongoing situation in Iran, I would be highlighting the 62.59, and there may even be a nice 1 to 2 day reversal from this level. It's just if you get involved in the short, because this would be the short opportunity that I would be looking for normally. If you do get involved with it, you just have to be very careful. Perhaps, you know, not hold it over the weekend at least, but you just have to be careful that nothing starts to happen in Iran, which can cause a supply shock, which drives the price of oil higher. So if you are trading oil, just make sure you are aware of what's going on in the Iran situation, which is unfolding. Okay, so wrapping up the video with gold and silver. Now, we are starting to get a bullish dollar. When we get a bullish dollar, I do tend to have a kind of negative or neutral bias in gold and silver, but the dollar is not yet strong enough to warrant a short bias on gold or silver. It's kind of neutral, right? It's bullish to neutral. It's stronger than other currencies relatively, but in and of itself, it's sort of neutral still. We do have this ascending triangle setting up on gold. So what I would like to see is I'd like to see gold pull back, dip into oversold territory on the week below the 437.869, and this is where I'm going to be looking to potentially buy the dip in gold for a 1 or 2 day bounce from the ascending channel. Now, that could also be a good place to get involved if you catch it cleanly and hold on for the break. But my mandate, my prerogative is to go for 1 or 2 days. If you want to hold on to it and take the risk of it failing, but the upside of that is the breakout of the ascending triangle, then of course that's okay as well. But just bear in mind, we're probably coming towards tops in both gold and silver based on history, because the last 4 times we've had this kind of 100% rally in silver, the following year was negative, and in each of the 4 years that this happened, we did see the dollar higher on the year as well. So I am anticipating a down year in gold and silver this year and an up year in the dollar. And I think that's probably going to come in Q1. But for now, I still favor buying the dip in gold and silver, but being nimble, being in and out on a short-term basis. That's the way I'm looking to play gold and silver, given the opportunity. Wrapping up the video with silver, I would like to only be a buyer of this market next week or do nothing. I cannot sell this market currently. And what I'd like to see is, as you notice on the 4-hour time frame, we are building lower highs and now higher lows. So what we're actually doing here is we're forming a pennant. We're starting to contract. So I'd like to see this come down, turn oversold below the 76.07, and that would put us right into the bottom of the pennant here, and that would be a great setup next week for a 1 or 2 day reversal to the upside, because I do not want to be shorting this from the top of the pennant, because if it does break, it could go up with some volatility. I do think we're coming towards the top, but it doesn't mean we have to top here. We could have one more big push up and then top out. So I really don't want to be a seller of this market right now. I just want to be buying dips, but I am going to stay nimble. If I get the opportunity to buy a dip, I will be looking to be out with 1 or 2 days worth of movement in this market. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.